Hey guys, Paul here with a first week review of the simple trading patterns strategy that I've started on this demo account. When I left you on Wednesday, we'd just closed out we had the pound yen, the US CAD, the euro yen, and the US yen that had been closed out. The euro pound trade bear flag, which was entered on the Monday as well, hadn't closed out at that point, which is this trade. So that was entered on Monday. It had come back and tested a couple of times. It came back up and hit it, retested again here, dropped down, tagged out take profit just before rallying right back up, retesting the highs and then dropping through again. So it was quite a choppy week in the end after a really fast, sharp move on Monday, when I thought maybe we were going to get this done on Monday. I thought maybe it was just going to go straight to it. It had reversed and come back, and it dropped down again and looked like it was going to go, and came back and retested and dropped down, tagged us out, came back up, re-hit it. Never really, even if you'd held onto it, even if you'd had more of a larger take profit, if you go over 100 pips, about 100, 115 is the most you'd gotten out of it. So that was the euro pound trade. That closed out positive. There's a few other trades I noticed as well, which I entered. I'm not sure which ones I had on the Wednesday review, but I entered this one on Wednesday. I saw a double top coming in here. It was around up, Paris was up here somewhere. I saw we'd hit into this. I had a pending short here. In fact, I think this was on the Wednesday. One of the Wednesday entries was this short. It got triggered, got up a little bit. Now then, price, I had my stop just up here. It was about 60 pips up, just above this resistance. On the Euro News, we rallied right up here, then we dropped. It got up by about 80, 85 pips, and then it pulled back, and I was looking at it as it was staggering around in here, and I noticed we made basically a double bottom here. We've hit, coming down, we've hit again, and it rejected it. And it was around here somewhere. I think I had about 50, 60 pips on it. And I was thinking, do I just close it, or do I take that? And I thought, no, I've got to stick, see whether we get a 2-to-1 risk reward. We've got a 60 pip risk, we've got to go for 120. But because of how far we had moved and the rejection on here, I felt it was reasonable. We've gone more than 1-to-1 on our movement. It was reasonable to at least trail the stop down to break even, which I did, and it came back and stopped it at break even. So that worked, I suppose, in our favour on the euro. I also saw we had a rectangle formed up here after a bullish run, and we're in a rectangle on the New Zealand USD. Now, initially when I started, I wasn't planning on trading rectangles, but I thought, well, we'll give it a go. And the reason I wasn't planning on trading it was because you often get this type of thing, I've found anyway, where you get a false break and then it goes the other way. And often this can be a head and shoulders will be a false break out of a rectangle pattern, and then you break down, give you the right shoulder, and then drop. So this did exactly that, false break up, just enough to trigger my entry right at the top of the candle, and then just went straight back and reversed straight against me, so we lost sort of 30 pips on that one. US CAD, we took this loss early in the week. I then saw a double bottom set up here. Where we hit this sort of double bottom in here, and I put a pending long on here. That may be on the Wednesday trades as well. They took a little bit of heat. The stop loss initially wasn't here. The stop loss was initially down below this area here. So there was a fair stop on it. stop loss must have been, it was about 55 pips because I was targeting 110. Took a bit of heat, but not a heap considering a 55 pip stop. We took about 20 pips worth of heat. Came back up, came back down, back up, and then once it broke up here, once we had this big bullish candle here, I tried to stop up to here, below this area. I felt it was reasonable, halved the risk, and we just kept rallying. Now then I opened the charts on early Saturday morning, my time, because I wanted these trades closed out by Friday, but I didn't want to hold them over the weekend. So we had 90 pips on the table on that instead of going for 110, so 20 pips short of our target. But I would say that was quite a successful trade on the US CAD. Aussie US, I thought we might have had a double top here, but it didn't set up, and I didn't see anything else I liked. Had a double top set up here on the Euro Yen. Again on Wednesday, I had a pending order down here, which is a fair way away from price at 80 pip sort of depth. And I just put the stop above the midway point, which is sort of 50, 60, 55 pips, and I had a target again of 100, a fairly large target on that, 150 pips. It was at one point up by 70, it was at about 65, I think. And again, I was contemplating trailing the stop on this. We ran this low out and then reversed. So we got a 1-to-1, 60 pips, 60 pip profit, 60 pip risk reward. So on these double tops and double bottoms, it may end up being that has a higher win percentage over a 1-to-1 rather than going for the 2-to-1. But I'm going to keep running at the 2-to-1 to see what we get. So that was a stop out. Also had a double top on the pound yen, and this is what I was talking about before when I was saying sometimes if you get the same setup on correlating pairs, you go for it on both and then you lose twice, on basically the same setup. So the same thing, 50 pip stop, targeting 100 pips. It got up by about 45 pips before reversing and stopping out. So at one point we had, that was 45 pips up, the Euro Yen was sort of 60 pips up, and the Euro USD was 80 pips up, and we had a fair chunk of profit, unrealized profit on the account, and that was just as the Euro Pound took profit on that same move, and we had sort of 8-9% on the account. So it was really hard. I found it really hard not just to close out and take that 9% profit. Would have given us 15% on the week. I found it very hard, discipline-wise, not to take it, even though this is only a demo account and I'm just testing a strategy. I found it really hard not to want to take that. So that was the outcome of those two trades. There's a couple of losses in there. Didn't see anything on the pound New Zealand. There might have been a triangle set up. We could have picked out a triangle in here somewhere, maybe something like that. Looking for a breakout of that, maybe. Sure. Now you could go like this. It's almost a pennant, I guess. It's a bit messy though. And on the triangle, to be honest with everyone, I didn't know which way. I was sort of looking at something like that, maybe looking for a breakout of this, but I didn't know which way it was going to break out. Let it go long on the breakout, and that's obviously the way that it ended up going. You got an uptrend triangle. I suppose the direction to go would have been, to make sense, would have been along above these highs, which would have been up here. Stop maybe below this main area. So you would have talked 100, 140 pip stop, 160 pip stop for a 250 pip gain. So in terms of risk reward, there's a good move, but it would have been very low drawdown as well. So that was there that I missed. Potentially Euro, Aussie, there was nothing that I saw there. Aussie Yen, nothing. CAD Swiss set up a head and shoulders. Again, I think this was late Wednesday. So this setting up price had just rolled over up here. It was about here. And I marked it out, and there's the neckline, there's the, obviously head, right shoulder. I put pending below the low, not below the low here, which I could have done actually. I could have come in with a pending here, so I'll go with a pending below these lows here. They came down, tagged the pending perfectly, and then shot back up. Now I had my stop 40 pips. My stop was 40 pips. It was just up here. I didn't want to go with a 60 pip stop way up here. I went with a 40 pip stop, and initially I had an 80 pip take profit down here, down in this area here, and it may still get down there. It went sort of 32 pips against me, and then dropped again nicely. Once it dropped down here and bounced Friday, I thought, I'll bring my take profit here, bought that up, dropped the stop loss down to break even, and thought if I just get a stab below these lows again. But then I came out again, same thing last hour right before we closed, dropping up and down in here, so I just took 50 pips off it. So it was 50 pips on that. So at the end of the week, when we started with a balance of 10,200, we ended the week up by 9%, it was 11,139.59. So 10 trades, we had 4 losses, a break even on that Euro USD. So you could say it was 5 losses and 5 wins. I haven't worked out exactly how many pips we took. It's at 210. We took 590 pips, and we lost about 155. So positive around 445 pips off 10 trades. So I guess that's average of around 45 pips a trade, which is actually our average risk. If you look, most of our risks is that smaller one. But most of our risks are around 35, 45, there's a few 50s and a 65 in there. Interestingly, the pound yen trade, the first one, that would have rallied away from that price point, 350 pips. If we just held on to that till the end of the week, this trade would have rallied 350 pips. You could have trailed the stop to break even and it would have never come back to it. That was the biggest, that was the main one that rallied away. The other one was the pound USD. It took off 190 pips from that initial entry here. That on the account actually stopped out break even. I made the mistake, well, whether it was a mistake or not, I trailed the stop on that one to break even as well. We really should have hit the take profit here, but I had it set too high, so that was my own mistake. And then when it came back and it looked like reversing, this was when the euro and everything was dropping. I bought the stop loss up and let it take it out. It would have gone up again anyway and taken me out, but I marked it down in the stats as a profit because it should have taken profit here if I. So in terms of the pattern and stats on the pattern, it would have been a profitable trade, and it rallied 190 pips from the entry. Those two are the only two that really went. The US CAD, I had a 1-to-1 on it. I was risking 15 pips. It did get up by 15 pips and then went back and stopped out. Euro yen, I took 90 pips. Had a small drawdown on that, 16 pip drawdown. And I could have gotten 100, but got 90, so I think it was went to maximum. Absolute, if you got the absolute best out of the week, was 105, but 100 to be reasonable. US yen, I took 70 pips out of that. If I'd held it to the end of the week, I could have got 115, gained, I got most of it. Euro pound took 90 pips. If I'd held it to the end of the week, it would have gone to 110. 20 pips. It's neither here nor there. That's a pretty good outcome. The pound USD got 80, would have got 80 pips. Could have got 190 in terms of the outcome of the setups. So left a bit on the table on the both pound pairs. The rest of them though, this Euro USD trade that got stopped out break even, it was up 80 pips, so it could have taken 80. New Zealand US was a loss. The Euro Yen, that was a loss, that could have got 1-to-1 and 65 pips out of that. The Pound Yen, that was a loss, could have got 45 out of that. The US CAD I took, and the CAD Swiss I took the maximum because I closed them out right at the end of the week. So a couple of interesting things. One is most of those trades at a 2-to-1 risk reward, I actually took the majority of the move out. I didn't miss out on much. It was only those two big moves in the pound that I missed out on a sizable chunk of potential profit. Trailing the stop loss on the Euro trade saved me some pips, but that didn't, effectively it lost me some pips on this trade, on the Pound Yen, Pound USD. And if I'd done that on the Euro Pound, that also would have stopped out. If I trailed to stop, we're almost to the take profit here. If I trailed to stop the break even, that would have also stopped out at break even. So could have saved me on the Euro Yen and Pound Yen. But would have stopped me out on the Euro Pound. And did stop me out on the Pound USD. So whether or not trailing the stop is an effective strategy to prevent, the trade flipping on you and stopping you out, whether or not trailing the stop like that is actually worthwhile or not. You do get quite a few that come back and retest your level and then go down and take profit. So I tend to think not. The thing that could be is taking something off at 1-to-1. I mean, 3 of the losses out of 5, actually 4 of those losses, this one, this one, this one, and this one, all at least went to a 1-to-1 risk reward prior to stopping out. There was only one, there was only that New Zealand USD on that rectangle, which I'm not a big fan of, was the only one that tagged and didn't go on to at least give me something. So from that point of view, it could have just had the one loss for the week, and the rest could have at least given me something out of them. But if you're taking half off at 1-to-1, then the remaining half, you're getting half the reward that you would get on that position. So if you've got a 2% risk at a 2-to-1, you're taking 4% profit. But so on the first half of that trade, you're taking once it gets up 1-to-1, so it's up by 2%, you take 1% off and leave 1% on. But that 1% that only makes, if it goes to take profit, it only makes 2%. So overall, you're only taking 3%. So that drops your risk reward to 1.5-to-1. But potentially increases your win rate. Although that's only if you trail the stop, because if you leave your stop at the original position, these Euro Yen, these losers, you'd take 1% off and you'd leave 1% risk on still, and then that would go back and the trade would end up break even. So I will monitor how many times, that's why I'm monitoring the overall available reward. We'll keep an eye on how many times the trade actually goes to at least a 1-to-1 risk reward situation before stopping out. because if we've got a 90%, if we only have 10% of our trades that trigger and get stopped out without at least giving us a 1-to-1, then those trades, those losers would, by taking half off at 1-to-1, that effectively means that you those losers that then go on to lose from that point would be break-even trades, and the winners will win 1.5-to-1. So you end up with a less flatlining your drawdown. Your drawdown is then less. So I'll monitor that. That's why I'm marking out the overall available reward, and the drawdown gives me an idea as to whether my stop losses are too big or big enough. So how much drawdown? So in the case of the CAD Swiss, my risk was 40 pips, my stop was 40 pips. It actually took 30 pips, 32 pips of drawdown. Plus spread, so that actually makes about 35 pips. I only had about 5 pips of play on that trade. The largest one other than that was 25 pips on the pound USD. Most of the others were triggered on the entries and went straight through. So I think that's quite a successful start. We made 9%. Even though we effectively had 5 losses, we had a win rate of 50%. Our risk reward paid out and has set us up with some nice winners, with some interesting data there around to gear us towards setting up the best money management strategy to give us steady growth. I'll continue on the next video with, I'll go through what might be in there for next week. I don't see a lot at the moment, but we'll have a look at that, and I'll speak to you then. Cheers, guys.